Investor sentiment, we talk about it all the time because it is so important. There's lots of well-established ways to gauge the mood of investors, but there's also some more obscure ways. And I want to look today at two gauges of sentiment that I just think are really interesting because they look at the behavior of amateur investors, right? How are the little guys positioned within this market? So let's look at some charts. All right, so on this first chart, the data here comes from a website called sentimenttrader.com. This chart tracks open call option purchases. So keep in mind, the options market just by itself provides lots of good information about investors' inclination to speculate, right? With options, you're not just making a directional bet on the market, you're actually betting on the near-term direction. And this chart is unique because it tracks investors who initiate transactions of 10 contracts or less, right? So we are specifically looking at small traders here. And the sentiment story is really interesting. Notice that open calls reached about 8 million contracts when the Dow peaked back in February. That's the red arrow there. The stock market then crashes. As we all know, it rebounds, and call option purchases surge to a new weekly record, about 30% higher than that prior peak. So what this demonstrates is that the rally since mid-March has been a powerful lure for small investors. The little guys have definitely not given up on this market. They are speculating to an even greater extreme than they were at the all-time highs. So that's an interesting profile. All right, now let's take a look at this next chart. Top graph here is the Dow Industrials. Bottom graph shows a metric called daily average revenue trades, DARTs, right? This is a metric used by brokerages. They represent average trades per day that generate payment, right? Either order flow, commissions, or fees. And we're plotting total DARTs at E-Trade and TD Ameritrade. So these are discount brokers. Again, we're looking at the behavior patterns of smaller retail traders. And notice that the average daily share has nearly tripled since late February when the stock market peaked, almost 4 million trades at these two brokerages. So here too, we have another sign that says the little guy remains fully committed to trading this market. If anything, they are more energized by the sell-off and the subsequent rally. So what are these charts telling us? This is second wave behavior. We see it time and again. This is the classic response to the first big retracement within a new bear market. Generally speaking, market peaks generate an influx of amateur investors. So metrics like DARTs, metrics like open call options, these are demonstrating that influx, and it supports our view that this is very likely a counter trend rally.